Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and today is the Republic Day. So, happy Republic Day to all of you. And I bring to you five stocks for the next 5 years that could do extremely well in this market. In this turbulent market, these 4 5 stocks have valuations on their side and has been doing fine on a long term basis. They are from different sectors. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research, and I'm not against any company that I talk about. I'm not a member of the NSC and BSC, and that I am not a portfolio advisor. Whatever discussions with respect to markets or investments I have is purely on the basis of my experience into the market over the last 10, 12 years. And whatever decisions with respect to investments or trading you take, kindly take that on note that it is laden with market risk, and do consult your financial advisor before taking any decision. Now, before I talk about these five companies, a small request: can you support me on Patreon? Once you do that, help me grow this channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you have access to my portfolio, my watch list, discussions on domestic and global economies, analysis on different companies, long term pick from my end. I'll be bringing that today, hopefully by evening. And whatever queries that you are having, I'll be answering that. You can be a member on YouTube or on WhatsApp as well. Uh, for that, you need to message me. The links are in the description. Now, for the five companies, let me take you to the screener website. So, these are the five companies that I'm going to talk about. Indus Towers is the first one, Uno Minda is the second, Interglobe Aviation from the aviation space, travel space, third one, Aster DM Healthcare, and Zensar Technology, which has come out with decent numbers and the stock is doing well. So these are the five stocks. None of them is in my portfolio. So that's a disclaimer. And in my opinion, these five companies, if you can hold over a 4 or 5 year period with the markets doing, should do well over that period. These stocks can do well. So let's discuss about Indus Towers first, and we'll discuss about each company for 3 minutes. Uh, it is in the tower business, and it is engaged in the business of object object of inter alia setting up, operation, maintenance, and wireless communication towers. So basically, they set up towers for all your telecom companies, say Vodafone, Bharti Airtel, etc. And they get businesses from there, and they have very good margins. And the stock is trading at around 10 times earnings, which is extremely interesting. It doesn't trade at 25, 30 times. So kindly take that on note. But even then, it is trading at very reasonable valuations at 100,000 crore. A market cap, it is a large cap company trading at around 368 rupees. If you look at the price pattern, the stock made a high of around 460 in August of 24, and since then it has been trending lower. And even though the results are good, the stock hasn't done that well, although in the last month or so, with the markets down over the last 10, 15 days, the stock has done reasonably fine. So that was also one of the reasons why I was bringing this up. In the December quarter, they did sales of around 7,550 crores versus 7,200 crores last time around. They had huge margin based on some extraordinaries, but the expenses were less at around only 590 crores. But even if we take margins at around 64, 65%, the company has been doing fine. So the growth has been around 10% or so, and the company is trading at around 10 times, which is very reasonable and can easily trade at 15, 20 times. So if I take the PE ratio on the basis of PE, it is trading at very reasonable valuations of around 10 times. Can easily stretch this up to 17 times or so based on current earnings, and that's why I believe that the downside here is a limited, in my opinion. In terms of shareholding pattern as well, we have promoters with 50%. FIIs have slowly increased their holding and is around 26%. DIIs are around 18%, and public shareholding has reduced to around 6% from around 7-8% just about 6-8 months back. So 6% public shareholding is there. So a very robust company in the telecom space. Rather than going for the pure telecom companies, you can go for the tower companies, other ancillary companies, and Indus Towers fits the bill in terms of the numbers. Second in list is Uno Minda, a very interesting auto ancillary company that had gone up, I think, 20x over this 5 year period. Has gone up sharply from around 110 during the pandemic time, all the way to somewhere around 1100, So it has gone up somewhere 10x over the last 5 years. But now the stock has gone into a long-term consolidation from July 24 when it hit 1160 till now. Over the last 1.5 years, it is down, and the auto cycle is down. So this is the best time to invest into uh, top quality auto companies, and Uno Minda is one of them. 52,000 crore market cap company trading at around 920 rupees at a PE of 58. If you look at the long term PE in terms of valuation for the stock, it is trading at under its 5 year average of around 60-61. It's trading at around 58 times, and the company is growing. The company is not degrowing. So if you look at the September quarter, December quarter numbers might be out in a week or so. In the September quarter, they did 4,200 crores of sales versus 3,600 crores. So that's a 20% jump in a very difficult environment. Operating profit went up from around 400 crores all the way to 480 crores, 11% margin. And if you look at on the bottom line as well, from 238 crores, the profits has gone up to 266 crores. So there is growth, 10-11% only, albeit, and that's why the stock is down. But the growth should pick up as the auto cycle turns around, probably in a year time or so. Discretionary consumption turns back in again. On the shareholding pattern, promoter hold a good chunk of around 69%, FIIs have around 10%, DII is around 15 and a half, and just about 6% is with the public shareholding. And that's why this company looks good, that the free float is less, public shareholding is less, large investors are invested big time into it, and the stock is already down somewhere around what, 330 rupees or so. If I take that uh, on the basis of percentage, the stock is down 25-27%. Reasonable valuations for Uno Minda as well. The third in this list is Interglobe Aviation, again a large cap company, 1,60,000 crores, trading at around 26-27 times, at around 4,200 crores. Here the Gangwar family, or all the major promoters, sold their stake at higher selling stake separately on the market, and that's why the stock fell here from around 4,800 levels all the way to 3,800 or so. And then the recovery took place. I think those selling periods are not now over, and December quarter they did reasonably well, 22,000 crores of sales versus 19,000 crores. So that has picked up, and margins have remained okay. I mean, it has gone down from around 26% last time around to 23%, but it has not crashed. And the stock price has already gone down, even in the recent times. In December, the stock went to 4,800, and then it bottomed out around 4,000. So the stock was down 17-18% with a reasonable numbers, and it is probably the only profitable airline company here in India, and one of the very few of the world largest airline company, best in terms of numbers, in terms of services. And if you look at the, even on the shareholding pattern front, yes, promoters have continuously sold from around having a market share of 75%. Promoter shareholding has gone down to 49%. But FII holding is around 25%. DII holding has increased from around 10% to 21%. And public shareholding has remained stable. It has not gone up sharply. It's around 4.7%. So overall, I believe now with the correction and everything that has gone on with Interglobe Aviation, it is at a very reasonable level around the 200 DMA at around 4100, 4200. uh, at a 1,60,000 crore market cap. It is a large cap company to look forward to for the next 5 years if you believe that travel is going to pick up even more over this period. Fourth in this list is Aster DM at 25,000 crore market cap. It is trading at 90 at a PE of 90, so this is slightly stretched. Coming back to Interglobe Aviation, it was trading at around 26 times. So let me see what is the average PE is around 23, 24 times over a 5 year period. So it's not expensive at all in terms of that, and it is picking up steam. So reasonably priced. In terms of Aster DM trading at 90 times, let's see how the PE matches up. So it is stretched, but I believe it is one of the fastest growing hospital company and has the best equipment in terms of tertiary care, and you can say uh, those equipments which are required substantially but rarely available. Aster DM has that. So very nice hospital in terms of that. And in terms of numbers, if you see in the September quarter, they did 217 crores of operating profit versus 142 crores. So that's a jump of around 50%, and margins expanded from 15% to 20%. That's why the stock is up so much and is trading at such valuations. So very interesting in terms of shareholding pattern as well. The hospital has around 42% with the promoter shareholding. FIIs hold around 23%. DII is around 23%. Public shareholding is around only 12%. So very interesting, very good company that is still down around 10-11% from all-time high, and has not corrected in this you can say meltdown that the market has seen over the last 3 months. In fact, it has gone up, albeit from September onwards. September it was around 410, 415. It has gone all the way to 500 level. So very good stock to look at if you're looking at the healthcare pharma sector, healthcare sector. I think Aster DM is one of them. The last in this list is Zensar Technologies. Zensar Technology is a 19,000 crore IT company. It is at around 830 rupees. The results were very decent this time around, and that's why the stock went up sharply from around 740, 750, and has shot up after that. It is in the IT domain, and it is a leading digital solutions technology provider and part of the Mumbai based RPG group. It is from that group of Sanjeev Goenka, and uh, they are into US. 67% of their business comes from US. Europe has around 21%, Africa around 12%, and their major clients, top 5 clients, bring in 31% of the revenue, and top 10 around 42%. But it is widespread in terms of client base for the company, because 68% of their revenue comes from the top 20 clients. So very interesting small cap IT company that is trading at around 29 times, not very expensive. Reasonable valuations, extremely reasonable valuations when you consider that some IT companies are trading at 40, 50, 60 times. On an average, its average P is around 23 times. The stock is trading at 29 times only because that it went up in the last couple of days after results. The results were very decent. 1,320 crores of sales in December versus 1,200 crores. So that's a jump of around 10% in terms of sales. Profits were stable and margins were stable, and that was the good thing that they had margins of 15% for the last 2 quarters, stretched to around 16. And that's what the street liked, because most of the companies are showing degrowth at the moment. In terms of shareholding pattern, 49% is with the promoters, 15% with FIIs. DIs hold around 20%, and public shareholding is only 16%. So that is also pretty good. So Zensar Tech is my fifth pick. So these are the 5 companies, in my opinion, that could do well over the next 5 year period. The Republic Day picks from my end. Let me know what you think about these companies as well. So this was a video on the Republic Day special video. Please like and subscribe my channel, hit the bell icon so you can get video straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.